a pretty common question is going between gold and silver and other precious metals. So what measures or factors might you choose when investing between gold versus silver? And when would you buy perhaps gold over silver or silver over gold, or do you always treat them equally? How do you play between the markets within precious metals? And Ed, why don't we start with you again?
Sure, thanks. I have in a very unique position. Not only do I write a daily newsletter for Casey Research on the precious metals, and I'm a member of the board of directors of GATA, but I also work part-time in the retail bullion trade in Edmonton. So I have a unique view of what's going on in the retail market, and right now it's very quiet. When somebody comes in the store and says, I've got $2,000 to spend, I tell them to put it into silver, like it was a very small amount, like under $5,000. That's what I tell them to do, and I give them the explanation that as far as I'm concerned, silver is the most undervalued of all the precious metals. If they got more to spend, 10, 20, 30, 100,000, then I tell them to break it up. Not because that's what I would do, because I would buy all silver with it. That's how strongly I believe in that, which I don't think is good investment advice to give to anybody, unless they strongly believe in it themselves. I tell them to put it 50-50. But both of them are going to go higher, but as far as I'm concerned, silver is the place to be.
Thank you. I buy according to the gold-silver ratio, and right now we're up at about 67, I think, is the silver's value is 1/67th of gold's. And so at these levels, I take my cash and I split it like 80-20 or 90-10, and I put 80 or 90% of it into silver, 10 or 20% into gold. If it goes over 80, I will be, which I think really could happen. I think we could see silver at 1/100th of gold's value if we go into a deflation. People will be going toward gold as the crisis hedge and not as many towards silver, and that just creates more of an opportunity for silver. So if it's at 1/100th of gold's value, the opportunity lies in going, being a contrarian and going against what the rest of the crowd is doing. And it'll be hard to do. Your natural instinct is going to want to be to buy gold. I will be buying 100% silver at that point. Back when silver was peaking back in 2011, I was only buying gold. I'm an accumulator. I continually buy a little bit, and but when it was down at the gold-silver ratio was at 30, I was buying gold and no silver. And there will come a day when it's probably down below 20 where I will convert my silver to gold, and I will, some of it, and I will be getting a whole lot more gold than I paid for.
Can I just I'm going to follow up on that, Mike, and just ask you, why does the gold-silver ratio have credence? Why do you play off that?
Well, for the first couple thousand years that gold and silver were money, around the planet, the ratios averaged about 12 or 15 to 1, that range. And I always wondered why. And, when you look at what the natural ratio is in the Earth's crust, there's about 17 times more silver than gold, but the mineable supplies were about 12 to 1. And so when they would dig it up and mint it into coins, there was about 12 times more silver in circulation than gold, so it was simply the free market setting a price equilibrium based on supply and demand, and to keep them both in circulation. And so the 12 to 1 ratio is a natural ratio. And then there was this series of fortunate events that created a really out of whack gold-silver ratio for more than 100 years. In the late 1800s, most of the world's central banks demonetized silver and relegated it just to coinage, just change. And they dumped silver onto the market, and at the same time, we hit the Comstock lode and the Klondike and these enormous silver discoveries, and silver just flooded onto the market. Its value plummeted to 1/100th of gold's. And then there was a Silver Purchase Act that the United States did in the mid-30s, and they accumulated this enormous stockpile of silver, and they started offloading that silver in the 60s and 70s, 80s, 90s, and they ran out right about the time silver bottomed in 2000. So governments around the planet no longer have these enormous stockpiles of silver that they can dump onto the market, creating a phantom supply, suppressing the price. There's a whole bunch of factors coming together where silver should reassert itself, and we should see it back at about 1/12 of gold's value. In 1980, it was 1/16th, and it had gone from about 1/50th to 1/16th. Well, if we're at 1/60th now, and it goes to 1/10 of gold's value, that means you've got 6 times whatever gold's performance was times 6, and so the winnings are that much bigger.
Perfect. Chantel's passing to Peter.
Okay. I really love gold, but I really, really, really love silver. I've been buying silver since it's been $4 an ounce, and I still continue to add to my position. Looking at the ratio right now, 65 times the amount of silver you can buy versus 1 ounce of gold. I think that's an excellent opportunity, but you just got to realize on the way down, it'll go a lot further. It'll outperform on the downside and the upside. So it's a lot more. It's a higher risk precious metal. But to be able to buy something under the cost of production, when most primary silver producers have all-in costs in the low $20 an ounce range, and you can buy it for 18 some dollars, I think that's an excellent opportunity. Right now, you might have about $2, $3 on the downside risk on silver, but it could easily pop to $25, $30 an ounce. There's a very high concentration of paper short positions on silver. So if we do see silver move past 2021, you can see a very aggressive short covering rally and momentum buying. So it's something that to kind of keep an eye out. But I think silver's got a lot more potential than gold does on the next bull run.
Thank you, Peter.